Hey traders, Raghee here, and in this free recap video I'm going to cover two names that we talked about in the closing chat today in the futures room, and they're kind of unorthodox conversations, but I think it really draws a really good line to give you an idea about the way that I like to use futures to trade really any market, not just futures, but looking at sectors, ETF stocks. Now, two of the positions that we have going on in the futures rooms are absolutely connected to one, the broader average, and two, one of the heavily weighted sectors in the broader averages. So I'm talking about Caterpillar and Nike. Now, CAT is a heavily weighted name within the Dow. And, we know that this is a price weighted average. It can fall in and out of the top 10, 12 names, but it is a heavily weighted name in the Dow. And to watch Caterpillar move alongside the Dow, I think is one of those things that allows you to play CAT and any heavily weighted name at a better level. So if the overall tide, if the Dow is moving higher, my expectation is if I can buy something like CAT from the bottom of its range, I'll have a better chance of one of these boats, I kind of look at it, boats and tides, this having a better chance of moving higher. And that's exactly what we did on CAT. We faded the support because the overall strength in the Dow continues to be up. Now, I'm not a big fan of playing the Dow right now. We'll talk about why that is and why most of the reason is Boeing and UNH. I've been a little bit more favoring pullback buys in S&P and NASDAQ futures, but we'll talk about Boeing and UNH in the premium video. But just suffice to say, I really don't encourage traders to do a lot of heavy trading in the Dow. I'd prefer you focus on the S&P trend and on the NASDAQ trend. It is much higher quality in the structure. The other conversation we had was the way in which XLY and Nike move. Now, why XLY and Nike? Well, remember, when you take a look at the sector breakdown of the different index futures, XLY is the third heaviest weighted sector in the NASDAQ, it's the fifth heaviest weighted sector in the S&P, and it's the fourth heaviest weighted sector in the Dow. So it has application across all three broader averages. Nike is a heavily weighted name within the XLY. And so there was some interesting movement in Nike after earnings. And so what we were looking for is the ability to scoop up some Nike after that, what I felt was really a 1-2 punch. Number one, the earnings miss and the sell-off, but that earnings miss and sell-off happened on a particular weak day in equities broadly. So I think it was exaggerated because the overall tide was going out, meaning the broader averages, and Nike was having a tough day too. So I think it kind of exaggerated the move. So we stepped in with calls in Nike, and you can see the movement higher since that. So we really faded the weakness. Now we took a little bit of heat because Nike didn't stop on a dime in the area between about $83.50 and $82. But remember, when you play options, you don't have this hard line in the sand. You don't have this binary stop loss. You're really playing time as well as options premium. So it gives you a little bit more flexibility to deal with higher volatility while still quantifying your risk. And that was the way we dealt with not just XLY, but looking at Nike as a part of that. And again, XLY, we talked about its importance to a futures trader. So these were two questions that I had in the parting moments. Am I happy with these long positions? I am. I'm actually quite happy that going into the last day of the quarter and of the month that we didn't see a lot of odd price action. The market pretty much stayed status quo within both these choppy market bounces. So I'm really looking forward to what we'll see come April as we start to see the end of month flows go into typically what is a little bit more of end of month flows and the redemptions we see at the end of the month, and then the reinvestment we often tend to see in the beginning of the next month. So I think that's going to benefit both these markets and the broader averages, and I'll see you in the next update.